Most people do not retire too early. They unfortunately retire too late. By the time they finally stop, the window they have to enjoy the time they've worked so hard for is much shorter than it needs to be. And the number in the bank that never quite felt like enough, guess what? It turns out it was more than enough. In this video, I'm going to give you 5 questions. If you can answer yes to all 5, I'm going to give you a reward, and the evidence suggests that you are ready to retire today. By the end of this video, you will know exactly where you stand across 5 areas: your work, your purpose, your income, your tax position, and the most important part, the people around you. Most people only ever think about one of these. The ones who retire well have thought about all 5. So let's get into it. Question number 1. Has your work stopped giving you back what you actually put in? You might still be really good at your job, but do you actually want to be there? Or does the alarm go off on Monday morning and you're thinking, ugh, how many more of these do I have to do? One of the most common conversations I have with clients in their mid-50s goes something like this. They're good at what they do. Their employer loves them, values them. Things are absolutely fine. But when I ask them what the last thing was that made them excited about work, they cannot recall anything. They don't hate their job, but they're not really enjoying it anymore. And when that happens, it's costing you more than it's making you. It's a drain on your time, your energy, and your health. How do you know if you're at that point, I hear you cry? Well, here's a few points to consider. When did you last learn something at work that changed how you think? If you can't answer that, it could be a sign your growth has stopped. Are you staying because the job still gives you something, or because leaving feels uncertain? Because those are 2 very, very different things. Finally, if money wasn't a factor, would you still actually bother to go? If the answer is no, that is not a reason to panic. It's the information that you need. And it brings us to the next question, which most people get wrong. Knowing you are ready to leave work is only half of the picture. The other half, and the one that catches people completely off guard, is what you're going to do instead. Question 2. Do you know what you're retiring to, not just from? The people who struggle most in retirement are not the ones who run out of money. They're often the ones who run out of reasons to get up out of bed. Early in my career, I worked with a lot of Shell employees. It was a super high pressure job for a lot of them, with long hours, enormous stress. So retirement was the dream, the finish line they'd been running toward for decades. The problem was that a significant number of them did not last, unfortunately, for very long after they got there. We called it the curse of Shell retirement. They spent 30 years defined by their work, the status, the structure, the sense of purpose that came with it. And then overnight, all of it was gone. They had nothing to get up for, nowhere to be, no one who needed them. The money wasn't the issue, it was their identity. So the question is not what you will do on your first Monday of retirement. The question is what you will do on your 450th Monday of retirement. Purpose in retirement tends to come from one of 3 places. Relationships, which means investing seriously in the people who matter to you. Contribution, which means using your skills in a new context. That might be a board, a charity, or a new project. And freedom, which is the deliberate enjoyment of the things work never left room for. Travel, sport, creativity. They're not complicated things, but all of them require a plan before you actually stop working. If you can describe clearly what your weeks look like 18 months into retirement, you are ready for this question. If the answer is still vague, that is the thing to solve first. So you know the work has run its course and you know what comes next. Now we get to the question most people think they have already answered, but very, very few actually have. Question 3, have you stress tested your income, not just counted your savings? Having a large amount in a pension or portfolio is not the same as having a retirement income. The two things are not the same, and confusing them is one of the most expensive mistakes I see. So here's a scenario I come across regularly. Someone's built up a pension worth, say, £800,000. They've run some rough calculations, worked out that 4% a year gives them around £32,000 to live on, and decided that they're completely fine. What they haven't done is account for tax on their drawdown. They haven't modelled what happens if markets fall 30% in year 2 after retirement. They haven't factored in a partner who may outlive them by 15 years. And they have not thought about what happens to their income if they need long-term care. The number looked good on paper, but there was no plan around it. A proper retirement income plan has 3 parts. It has an investment strategy built for income. It has a tax-efficient withdrawal strategy, knowing which account to draw from, in which order, and how to manage your taxable income each year to avoid unnecessary tax bills. And it has been stress tested. What does your income look like if markets fall significantly and stay down for 2 or 3 years? If that scenario ruins the plan, then guess what? The plan is not ready. If you've done all 3 of these properly with someone who has reviewed the numbers, you can answer yes to this question. If you've only done the rough calculation on the back of a fag packet, you are not there yet. Now, most people who watch this video have thought about their savings. Far fewer have thought about what happens to that money when they die. And the changes coming in the next few years make this more urgent than it's ever been. Question 4, have you mapped what happens to your wealth after you go? Most people plan for retirement. Very few plan for what happens to their money after they're gone. From April 2027, pensions will be brought into inheritance tax for the first time. Under the current rules, your pension sits outside your estate. So many plans have been designed around the idea of spending everything else first and leaving your pension untouched to pass on to the ones you love later. Under the new rules, it will be bought into your estate the same way as any of your other assets. So for a lot of people, that one change alone adds a 6-figure tax bill that they weren't expecting before. If you haven't looked into this already, you can watch some of the other videos we've made around the changes that are incoming. The question is simple. Do you actually know what happens to your money, your home, your savings, your pension when you die? And does the person you want to benefit from it know to? If the answer to either of those is no, that is the conversation to have before anything else. Yeah. We've covered your work, your purpose, your income, and what happens after you are gone. There is one more question, and it's the one most people never think to ask, because retirement is not just your decision. Question 5, have the people this affects been part of the conversation? Retirement is a life change, not only a financial one, and if the people closest to you are not aligned with it, even the best financial plan can create a lot of friction. This comes up more than you expect. One partner's ready to retire, the other is nowhere near ready, or more accurately, has not been consulted or asked. And the result is 2 people suddenly spending 24 hours a day together in a dynamic that neither of them fully prepared for. I know my wife would kill me. The finances are fine, the relationship structure has changed completely, and no one talked about it in advance. This is not a criticism of anyone, it's just what happens when retirement is treated as a financial event rather than a life event. There are a few conversations worth having before you make the decision. First, with your partner, what does a shared retirement actually look like day to day? Second is to do with your family, particularly if their financial expectations in either direction. And third should be with a regulated financial planner. Having someone who is not emotionally involved look at the full picture and tell you what they actually see. If those conversations have happened and you are aligned on what comes next, you are ready. If you have honestly answered yes to those 5 questions, the evidence points in one direction. None of the clients I've worked with will tell you the best part of retirement was the money. The money was the enabler, the thing that made everything else possible. What they actually talk about and what really lights them up is the mornings they didn't have to be anywhere. The trip they finally took, the grandchildren they got to spend time with, or the projects they always said they would get to but didn't get the chance until now. That is what retirement is actually for. Not a number on a screen or a tax strategy or a pension valuation, a life that reflects what you've worked for and who you've built it with. The 5 questions in this video are just the map. You are the one who has to decide whether it's time to start. If you'd like to understand where you stand across all 5 of these areas, the link in the description box will take you to a call with a regulated financial advisor. If you found this video useful, please like it and subscribe to the channel for more retirement content. And thanks very much for watching.